Welcome to MFX Center's YouTube channel. How are you doing today? In this video, we'll be talking about some of the most interesting setups that are developing right now in the Forex market and how we can make some profit on it. It is a kind of a weekly commentary, but I'd like to say as trading setups because that will help you to understand the market as well as make some profit out of it. So you have a small amount of capital and you want to make some money, but you don't want to learn. So no worries, this is the video that you are looking for, and this video is going to help you to make some money. Of course, trading involves risk and I cannot predict the market 100%, but with all kinds of probability and everything that I've researched and known so far and have studied so far, I can help you to make some good amount of profit every week. So let's dive in. So the first pair that we are going to look at is Euro USD. Euro USD is currently sitting at one of the important level that I call is even level, that is at 1.1175. Actually it's 77, but yeah, 1 to 2 pips we can take a gap, right? So the overall trend was quite impressive and it went above after breaking above my triangle formation that I've drawn earlier, and currently it is sitting below 1.12. So that is a very good indication that the market might fall lower. So this is the H1 chart, and if you go to the H4, we can see that the overall H4 candle, that's the current H4 candle, it's kind of rejecting the 1.1175 and it is showing some bearish pressure as well. So if you just look at what the market is doing right now, is that the overall structure in the MACD is sloping lower. Just look at it. The recent structure in H4, while the market was pushing higher. So that is a continuous divergence over here. And there is a development of a MACD lines divergence as well. So that does indicate that there are certain possibilities that the price will be pushing lower. But how much? So if you just take a trade over here from like 1.1168, the current price, and you have a take profit level at 1.11, that means you are gaining around 65 pips, right? With a stop loss of around 30. So that is easily 1:2 risk reward ratio. But if the market manages to break below 1.11, it will straight go below towards 1.1020. Yes, this is the level. So first take profit would be this level, and second take profit level would be this. So with like around 30 pips of stop loss, you're getting around 60 at the first take profit and around 140 at second take profit. So I think that's pretty good deal, but we are not expecting the target 2 to be hit right now or even in the coming days. I just expect price gives me around 60, 50 or 60 pips from here, and then I'll be looking forward to buy again because the overall bullish trend is currently non-volatile. So this is the first setup of Euro USD that is currently developing. Then the next currency pair we are looking at is USD CHF. USD CHF has been quite volatile around this level, that is 0.96, and it went below and again up, again below and again up. Just look at the recent H1 candle that went below 0.96 with impulsive bearish pressure, and then it also took out the recent low. If you just look at here, yeah, it was taken out, and then the price moved higher. So that means this area has got some kind of volume accumulation, and from that volume accumulation, market pushed higher. There were some bulls parked over here. So what I'm currently expecting is that market will be pushing a bit lower, and I'll be expecting to buy from 0.96 with first target towards 0.9640. So you might be asking where my stop loss would be. That is a pretty good question. In this case, when the price bounces from 0.96, it will be a pin bar or kind of engulfing bar or even a 2 bar because it is a correction period. So we'll be just putting our stop loss just below that bar. That is around 12 to 15 pips of a stop loss, and then we will be targeting for 35 pips. So that would be like 1:3 risk-reward ratio based trade. That is a pretty impressive trade. Then the next currency pair we are going to discuss is Euro JPY. Euro JPY is quite like the Euro USD, but the overall formation, overall trend momentum is not quite the same. So what we should expect? In this case, let's look at the watch currently. That's the market watch. It's 13 hours, and we have around 3 more hours for completing this H4 candle, right? Okay. So what our task would be, we'll be waiting for 1 or 2 hours from now on. That is 120. That is around 120.35. And after 1 or 2 candles, if you see a bearish continuation, that is 1 or 2 bars with bearish bodies, we'll be looking forward to sell. Then what would be our stop loss? Our stop loss would be around 30 bips, and our take profit, the first take profit in this case would be, let's look at it, 44 pips. That is 1:1.5. Okay. Then our ultimate target would be at 118.50, though there is a kind of a near-term level around 119.25. So there are 3 take profit levels. First take profit with around 45 pips. Second take profit would be around 105 pips. And then third take profit would be around 180 pips. So though I'm not currently expecting the price to move back that lower, because the overall market situation is quite non-volatile. So currently I'm expecting after 1 or 2 hours, if I see the continuation of the bearish pressure, I'll be looking forward to sell. And our first target would be 119.90, then 119.25. These 2 levels are my priorities. Then if the price manages to push below 119.25, that is a plus point, and I'll be looking forward to keep my selling on with the targets towards 118.50. Okay, so these are the 3 pairs I'm currently looking at, and I'm currently trying to trade in this, but the most lucrative one currently is the Euro USD. But I'll be waiting for 1 or 2 hours as like Euro JPY to get more confirmation, though there is certain confluence here. But yes, we'll be looking forward for such a confirmation for the conservative approach. So thank you for watching my video, and please don't forget to subscribe and like our videos, and stay tuned by clicking on the bell icon. Thank you.